Okay, if everyone's ready, we'll make a start. So good morning in Europe, good afternoon in Asia. My name is Mike Bambrick. I'm the Client Services Director at Integration. What we're going to do today is to spend a few minutes to go through some interesting learnings on how we can use the toolkit that we offer to help brands to find and to take growth opportunities. Just a small bit of housekeeping before we start, just to make the presentation manageable. We're going to keep everybody on mute. So if it's okay with you, if you can use the chat box and send a message to the organizer if you have any comments or questions as we go through, and then the organizer will contact me and I'll try and respond in the best way that I can while we're doing this. And of course, we have some contact details at the end so that you can follow up and ask any other questions that you want to. So let's get started. When you speak to most C-suite level managers in a business, the CEO, the CFO, and so on, their major agenda is growth. The continuous search for growth opportunities, which is about fueling demand, and doing that on an ongoing basis is the primary agenda that they're focused on. So we've been working with clients on how to use the toolkit that we're going to look at to identify opportunities for growth and then to help them to move in a direction so that they can actually leverage against those opportunities. Okay, now that means a few things. First, finding the opportunities in a complicated market scenario. It's not easy when you have many variables in marketing and in business, and you have multiple brands and you operate across multiple markets, and everybody who is a budget owner tells you that there is an opportunity for growth and that they want more money from you in order to go looking for that. How do you detect the most important and immediate opportunities for growth? So business managers need a tool that can help them by using some key business indicators to identify, and then a diagnostic as to what they need to do in order to take that opportunity. And that must be something that you can use to look across all of the ways that you might invest your resources in finding growth opportunities across all the communications channels, to look at the synergy effects across a consumer journey to understand which types of activities are the ones that will contribute most to growth, to look at the performance and the growth opportunities across consumer segments. It's extremely important to understand where we're doing well versus where maybe we have an opportunity to improve. Our competitors are winning, for example. To understand across the variables of the sales mix, where is the opportunity? In fact, where is the barrier that if we remove, we will release growth into the system? And to be able to do that across a portfolio of brands and markets. So what we've done is to work with clients using our toolkit to make sure that the answers to those kinds of issues and the ability to look into those is answered. And we do that using a toolkit that we call MCA, or Market Contact Audit. So that's what we're going to talk about with you this morning. It's a brand value management tool. Fundamentally what it is a measurement tool. So it uses a universal standard of measurement for communications effectiveness that we call brand experience points. It's driven by voice of the consumer research, and the whole purpose of this is to provide a simple, transparent, single currency that allows us to, among other things, identify opportunities for growth. One of the primary ways that we do that is to use that currency of brand experience points to establish a clear line of sight between building brand experience, in other words, creating interactions with your consumers or your customers, and then how well is that converting into a business outcome, into market share, so converting into transactions. So what we do is to produce two key business indicators. We call them that because both of these are linked to money in and money out. A business indicator means it's linked to financial indicators. One is the interaction ratio, how well are we communicating, and the other one is the transaction ratio, how well is that converting into a sales or a market share outcome. Now, once you have a line of sight like this, then you're in very good shape to start identifying where are the opportunities for growth. So fundamentally, the line of sight looks like this. Number one, we identify with the user of the toolkit, where are they spending their money across all of the communications outcomes. Okay, so at a fairly granular level, what is the total activity cost of all of the activities that we are running right across all of the ways that they're finding ways to engage consumers? Okay. We do voice of consumer research in the middle to understand from a consumer perspective what brand experience is being achieved. So that's where the voice of the consumer drives this process. And that voice of the consumer research, which is quantitative analysis, allows us to understand using a single currency what all of these activities are delivering and relate back to how much are they costing through that spend analysis at the beginning. And then by comparing that brand experience to what's happening in market in terms of sales and market share, we're able to understand how well is that converting into a business outcome for the user. So fundamentally, that allows us to see two ratios, the interaction ratio and the transaction ratio. So number one at the bottom there is how much brand experience are we achieving and where can that be improved? And then number two, how is my brand experience converting into sales and where are the opportunities to grow? So it gives us two opportunities to look for growth. What does a single currency do? Why is that important? Excuse me. So the tool operates by looking with consumers in research at a very large, very complete set of what we call contacts. Some people will call them touch points. So all of the ways that you interact with consumers and sometimes the ways that consumers interact with each other as well. So it's any encounter between a brand and a consumer. So it's a very long list. The maximum typically is around 35 contacts, and they will be spread across all of the major types of activities. So point of sale activities. So if, for example, in a drinks category, you'd be looking at everything in the on trade, bars, pubs, and clubs, restaurants, and those kind of things. The off trade or the retail business through supermarkets and liquor stores, mass media, digital experiences, sponsorship experiences, customer marketing if you have direct personal relationships with your customers, and so on. So it's deliberately designed to cover all of those possible ways of contacting consumers. And what the single currency does is to provide you with an understanding of what each of those is contributing in a way that you can compare. So we have a number, a brand experience points number, which is the amount that each activity is contributing to the total brand experience. Okay, so in this example, you can see that the bars at the top, so TV ad is the fourth largest in this small edited example, is a pretty big driver of brand experience, very near to end of aisle displays is the second one, and so on. So you've got a quantified number on how much we are achieving through each contact. Most importantly, we're able to add them up so we know how much we are achieving in total, and we can benchmark because the research allows us to see both what we are achieving across all of our contacts, but also what all of our competitors are achieving. So we know our total brand experience points and we know our competitors, and you can break those down into groups of contacts, so we know exactly how much we are achieving in point of sale activities, in mass media, in digital, and so on, and we can benchmark versus competitors. And a big part of understanding where to find growth lies there. It's where can we win versus competitors, and where are we currently not winning. Okay, now you'll see there's a column in there that says BES. That means brand experience share, which is a measure of that our share of the total outcome of all of the communications that are happening in market. So it's an outcome indicator that represents how much within a given category we are achieving. Now, the whole reason for using this tool is that brand experience share is a very good indicator of market share performance. We know that because that's been independently tested by a variety of people. I'm going to show you an example in a minute, but the purpose of highlighting that is to say that we know that this measure of brand experience points is something which is directly related to business performance. That's why it's worth measuring. And therefore, if you can improve brand experience, then it is very likely that you will be able to find the growth opportunities. Just as a small piece of reassurance for you, we worked with the ARF, the American Research Foundation, a few years ago actually, with a very large database for them to validate whether or how well the tool is working at predicting market share outcomes. And their conclusion was that it's a very strong predictor. So on the top left, the graph shows you across the whole database that we shared, what do we see in terms of correlation between brand experience share and market share outcomes. And we see a correlation of 0.85, which is very good. And on the top right, when you break that down into, does that work within individual markets? The answer is yes. So that the plot on the right is the data points just for the US, picked out in blue. On the bottom left, does it work for our individual categories? So on the bottom left, you can see that the dots for one particular category were picked out, in this case, feminine care. And do we see that there's a big difference when we do different types of research methodology? So we've picked out on the bottom right, face-to-face interviewing versus online interviewing, and we see the same pattern. So in other words, it is a very reliable predictor of market share outcome. And most importantly, there's a causal relationship. So meaning, if brand experience share increases, it is likely that in the following period, you will see that there is a growth in market share. So in other words, it's an indicator that is telling you what is going to happen in the future. It's an early warning indicator, which is the most valuable thing in any management process. What we're showing you here is a small extract from an article published in AdMap, which was from one of our largest users, where they looked at their database and established exactly that using a dynamic Jones analysis, they saw that the relationship between brand experience and share of market was very good, and in fact it was a much better predictor than what's often used for this kind of analysis, which is share of voice. So the reason that you might want to use this tool is because you know that it is a good, very robust predictor of what is going to happen in market. So let's look at how we would use it to find growth opportunities. In this webinar, we're going to look at two ways of doing that. And it starts by looking at those key business indicators that I talked about at the beginning, the interaction and the transaction ratio in our current markets and for our current brands. You can also use this to start establishing in places or categories where you are not currently operating, where there is a big business opportunity, but that's a subject for a different discussion. So for today, we're going to look at applying it in your current markets on your current brands. And we're going to look at it in two scenarios. One is if your conversion from brand experience into market share, so if your transaction ratio is good, then how do you use this tool to find growth? And then we're going to look at the other scenario, which is when your conversion rate from brand experience to market share is poor, where would you go looking? Okay, and the reason that we've split those two things is because they lead to different sets of insights and therefore different sets of actions. Okay, fundamentally at the top, if you know that your sales process is working well, then growth is probably going to come from enhancing your brand experience further. If you've already identified that your brand experience conversion to market share is weak, then the action is going to be, what is the barrier and how do we go about eliminating that? So that's why we've split it into those two ways. So let's look at the first one. My brand experience share overall is good. Sorry, excuse me, my conversion rate is good. So where do I go to improve my brand experience? So this first example highlights why it is important to understand this from a consumer perspective using consumer research as opposed to any other data source. The reason that this is important is you can see how your performance varies by consumer segment, and that is often a good source of growth. So in this example, which is in fact for a beauty care brand, we looked at, on the left of the graph, the interaction ratio, meaning how much brand experience are we achieving versus the average brand in the category. It's expressed as an index versus the category average. So if you look at the top, you can see that this brand is indexing 95. It's just below the average brand size in the category. And on the right, its transaction ratio, so how well is it converting its brand experience into market share, is pretty good. It's indexing at 143 versus the category average. So this is a brand that probably is under communicating overall, but has a very strong sales mix. But most interestingly, when you then look at how that varies by type of consumer, so the graph is then showing you a whole series of breakouts by income, by socioeconomic group, by shopper types and so on, then you see that there is something very important for the brand to understand, which is that there is a misalignment between the people that they are communicating with versus those that they are more likely to sell to. So if you go down to where it says Brand X Core Segment, this is the core segment that they have understood very well that their brand is absolutely perfectly positioned for. So the core segment sales conversion of 238 tells you that for every point of communication that they achieve, they are extremely effective at converting that into market share. Okay, but the problem, or rather the opportunity, is on the left that these are people that they are not communicating very successfully with. So their interaction ratio is actually very weak for their core segment. But the people that they're interacting with most successfully at the top of the graph are very unlikely to be profitable consumers for them. So they're communicating with people that are low income, lower socioeconomic groups, older and so on, which is exactly the opposite of their core segment. So what this allowed the business to do was to fundamentally identify that the issue here is that they are not targeting and communicating successfully with their most profitable customers. Now that's a growth opportunity, because if you can re-engineer your communications in order to actually connect successfully with that group, then you are much more likely to turn that into profitable sales. And the toolkit allows you to do that. So this is for a different example, but the principle is exactly the same. What we did with the user was to go through a multivariate analysis, which ended with this table that shows you, for the column that says share of investment, that was the way that they were allocating their marketing communications budgets. 33.6, so 34% of that was going into contacts which were very small contributors. So they were worth very little to the business, but were consuming 34% of their resources. So they were in the bottom 20% of their brand experience, and they're below the visibility threshold in the category. What we were able to do was to, number one, clearly identify there are resources in the business that are not contributing much, and then also at the bottom of the table, identify those contacts or activities which were the must-win battles, the ones that they absolutely had to win in order to connect with the consumer groups that they were interested in. So what the tool enabled this business to do was to redeploy 34% of their budgets within the existing total amount. So it didn't cost them any more but it allowed them to eliminate wastage and to reinvest in the things that were most important in order to win. So what the business was able to do is to identify where is it that there is an opportunity, and then how do we find the resources to go and fund that. Now, the other scenario that we talked about a little earlier is if in your line of sight your communications overall are working well, but they are failing to turn into a market share outcome, so your sales conversion is weak, then how does this tool help you? The answer, of course, is what you need to do is identify what is it in the sales process that is letting us down. Because if you can remove that barrier, then you already have the strong communications foundations for the brand that should lead directly to releasing the growth opportunity. In this case, this was a brand that we found that was operating across a number of sales channels, but it's in a developing market in this example. What we found overall, and we're looking at brand F on the graph in the middle, was overall that their sales conversion level was very weak. So it was indexing 68 versus the category average, okay, where the leading brands are well over 100, and in fact, in some cases up to 200 plus. So there's a long gap in terms of the sales conversion from our brand versus the best in class. What we did was to use the data to say, okay, let's have a look at how well we are communicating to different shopper types. One of the first things to do that is useful is to understand whether we are taking all of the opportunities by communicating with people through different types of shoppers. In this case, the shopper types were broken into 4 major channels: super or hypermarket stores, so we're looking at the graph on the left, warehouse, retail, market stalls, and drugstores. It was very clear that the brand that we were working with was failing to communicate successfully with 2 shopper types: those who do most of their shopping in warehouses and those who go to market stalls, which represent a very large proportion of sales in the category. So they're responsible for more than 45% of sales. But our performance in that, in terms of engaging with those consumers, was very weak. Okay, whereas you can see that the brands that are very successfully communicating with those shopper types at the top are the ones that are converting their market share into converting their communications into market share very effectively. So it was very clear that improving our level of communication amongst those shopper types was the route to growth. So it was fundamentally a way of saying that there's a channel marketing mix that's missing here. So a very clear opportunity for growth. Now, if you are a multi-market or multi-brand operator, this is a tool that you can use to compare across markets or across brands within a portfolio and do exactly the same sort of analysis as we have been looking at for consumer segments. You can roll that up and then look across markets and see where are the big opportunities. In this case, this is in fact in an automotive category. We have a brand here that is operating across a large number of markets. And what we're able to do is immediately to understand on the left, how well are they communicating? So that's the same indicator of, we call it interaction ratio. In fact, this client prefers to use the term engagement, but it means the same thing. And on the right, the conversion to market share, conversion to sales ratio. What it showed was that there were some businesses where, some markets where they were not taking the opportunity effectively. So if you look at markets like Bulgaria and Italy and Brazil, you see that those are countries where they have a very strong sales conversion ratio. In other words, their ability to sell, because their mix of product, price, and distribution is strong, is already well established, but they are not communicating as effectively as they could. So they're either at or in some cases below the average of the category in terms of engaging consumers. And that's an indicator that says if you are able to move resources into those markets to improve the level of communication you're achieving, you have the foundations to grow very quickly. So you've identified a growth opportunity. And you can also see that there are two markets where they are probably over investing in communication. So in France and Spain, the level of communication outcome that they've got is probably not justified by the size of market opportunity, or more importantly, the growth opportunity. Okay, so what this business was able to do was to look at the allocation of resources across markets and identify some ways to finesse those so that they were able to take some of those local market opportunities that were currently being left on the table. Okay. And then the final piece of this is to say it's just as important when you're looking for growth opportunities, number one, to identify where they are and how you would take them, but it's also really important to understand how are you going to fund them? Where am I going to get the money to take these opportunities? So the tool allows you to get into that space as well, as follows. Remember, the line of sight that we create is understanding where are the investments going, and in fact, how much are we investing in total, and then comparing that to the outcome in terms of communications and the conversion through to sales. Now, once you have the investment part of this and you can compare that to the brand experience that each investment is achieving, it allows you to go and look for where are the funds that are not contributing very much or not performing as well as they should. So this small table shows you across a couple of, across 4 markets. The first column shows you the level of brand experience that we're achieving, expressed as a share of brand experience. So remember, that's the indicator that correlates with market share. And then we know from the user what is the total investment across all communications, and they're all expressed in one currency in order to make it comparable. Okay. The third column, percentage of non-working funds, is a very simple analysis. Within each market, we know how much money is being spent on each activity, and we can see how much of the resources in each market are spent on activities which are very small contributors to brand experience. In other words, things which we're spending time and resources in the business and investing funds, but they're returning very little in terms of brand experience. We would describe that as non-working funds. The analysis is a really simple one. It's a Pareto, so it's an 80-20 analysis. We identify the contacts which are the bottom 20% contributors of brand experience, and then we look within those to see how much money is going on to those. In this case, there's one market where there's an unacceptably high proportion of money going into things which are not good contributors, which is Bulgaria. 34% of their total spend is in contacts that are not contributing much. That's an obvious opportunity to go and release funds, because you know that you can switch those off or redirect them, and very little will be, there'll be very little downside. And the other thing that you can do is benchmark and establish some norms in terms of what generating brand experience should be costing. So you can use this data to understand the cost per brand experience share point per 1,000 people in the market or in the category. Okay, so in other words, you can weight it so that you can compare the actual cost of operations across markets. So if you look at the 3 big markets here, Brazil, China, India, you can see that the cost per brand experience per 1,000 people in the market varies a lot. China and India are operating at $12,000 or just under $10,000, and Brazil is operating at $27,000, nearly $28,000. It's clearly out of line with what you'd expect with the other very large markets. So there's a very obvious management priority here to understand why is it costing us more than double per consumer to achieve a market outcome than it is in Brazil and India, and identify where in that performance improvements can happen, because that will release resources. So and often we find actually that the most difficult thing in terms of finding growth opportunities is where do I find the money to go and fund those? So this is a tool that allows you to close that loop by identifying the opportunity by segment or by market, to identify strategically how you would go about taking those opportunities. In other words, how do you start allocating your resources by contact and by market in order to do that? And then where do I go looking for those funds in my current activities by identifying the things that are contributing the least? So that's all we wanted to share with you this morning. I hope that was interesting. I didn't see any questions come up as we went through, but I think we probably captured some as we've done. So we'll try and respond to you individually as we go. Thanks for listening. Hope it was useful, and do get in touch with us through the website if you want to find out any more. Thank you very much, everyone. Bye-bye.